All the gang is here. Thank you all for coming. Happy Sunday, or happy very early Monday morning if you're in New Zealand or Australia. So thank you all for joining. And I'm just going to make sure my audio works. It's always a good test. And it does. Excellent. So people talk about alpha pack shows, but literally, guarantee you, there is nothing that comes close to the amount of alpha that you will uncover in this show today in 40 minutes, nowhere else on the internet, on Earth. And thank you all for joining. So let's go. And it's an exciting time to be alive. And none of this is investment advice. I just share openly and transparently what I do. And by the way, I would not be able to do these Sunday shows if it wasn't for the brilliant questions that come from the team in Patreon. And every week they get harder and harder. So a big thank you to the community for the brilliant questions that we look at every week. So it's great not having to come up with ideas, just literally answer the questions. So let's go. This is a first one from Black Sheep 007. That must be James Bond Black Sheep. Can you have a look at the thesis written by BlackRock employees on Bitcoin for wholesale investors and decode it for our community's consumption? Brilliant question. So I will drop a link to this later. It's a 42-page paper. It has a lot of complex finance stuff in it, but I'll make it real simple. And in fact, it's worthy of going into a lot of the concepts that are unbaked in it, but baked in it. But this is the paper. Again, 43 pages, papers.ssrn.com/sol3. It's funny. I don't know what sol3 means, but literally that is the URL. You'll see it later yourselves. You can't make this stuff up. Could it be stored? Anyway, I always like to find interesting patterns. But anyway, let me just summarize this paper and what makes it so important and so special. So the TLDR, which means too long, don't read. Basically, if you had to summarize it in 5 or 6 words, it would be go at least 3% Bitcoin allocation. Just do it. But really, it talks about how Bitcoin returns are very skewed, meaning that there are lots of big gains to be had, but also a few big losses. But over time, the gains far exceed the losses. And they talk about skewed distribution of return, which basically means investors who like skewed returns, such as those who use what they call the CPT, the cumulative prospect theory, they will want to allocate a significant portion of their Bitcoin or their portfolio to Bitcoin. And they also talk about positive skewness, and that refers to the asymmetric distribution of data points and the asymmetric bet that is Bitcoin. And also, even if Bitcoin is expected to lose money, in the normal regime, as they call it, investors who use the power utility will still want to allocate around at least 3% of their portfolio to Bitcoin. If the probability of the bliss regime happens, that's where Bitcoin gets extremely high returns, you only need to put 1% in. And that is kind of crazy. By the way, the cumulative prospect theory is basically decision-making under uncertainty. And they go into a whole bunch more stuff, but it really has a lot of really interesting finance stuff in it. And if you guys want, I can make a detailed video about all of this, but I tell you, it'll be hardcore. Mr. Hammer, thank you so much. And Glenn out there too, and everybody else, really appreciate you. We have a really good sponsor today. So let me know if that's of interest, but it is heavy duty. I read it twice. A lot of it I had to go back and scratch my head, but literally that's all you need to know. Even like literally you can just put 3% into Bitcoin, you'll be fine. And if you're afraid about 3%, put at least 1% in, and that could save you considering where things are going. And literally it will, on average, at least make 100% returns a year. And it's hard. And we haven't seen anything like the money that's about to come. So that's why I always say the future is very bright. You just need to stay healthy, my friends, out there. So next question is from Goal 2030. Must be a soccer fan. I am looking at adding MicroStrategy to my 401k as a Bitcoin proxy. My question is, how do I figure out at any given time how many shares are the equivalent of one Bitcoin? And as the price of Bitcoin goes up, does the price of MicroStrategy match it dollar for dollar? Great question. And every month I send out the updated ARB calculator, which is here. I did August version, I think, on Friday or Thursday last week. So check your inbox and Patreon. Everybody has this and hundreds of other models that are out there. But if you look at this ARB model, one Bitcoin, one whole coin in MicroStrategy shares currently today is 84.807 shares. And that'll cost you about $31,970. And that is the nature of the beast right now. So it is cheaper to buy pure form. But the problem is MicroStrategy has been on a tear. It's far outperformed Bitcoin this year. And it went up to 475 about a month ago. And I was like, or 3 weeks ago, whatever. I was like, that's going to the stratosphere. But it has done that before. Remember in, what was it, late 2020, early 2021? It shot up to $1,100, $1,200. So it can do that. And sometimes people are desperate for proxies because they don't have access to a spot ETF, etc. It's the only on-ramp. So things can go crazy, but it's always good because everything mean reverts, everybody. So that's that. Oh, by the way, there's also some price targets there. If you imagine Bitcoin goes to, say, $100,000, the theoretical MicroStrategy price should be $1,200. So that'll give you a good idea of how to play. But again, you know, in full disclosure as well, I always say never put more than 10% in one basket or etc., etc. And I always stress pure form Bitcoin. But if MicroStrategy dips a little bit more, I will break my 10% rule and go a little higher. So we'll see. And this is an important chart as well that shows you the impact of MicroStrategy share dilution. Again, I shared all of the share dilution in a Patreon exclusive video last week on MicroStrategy. I calculated it all over time. But this is really key here, is because MicroStrategy finances Bitcoin purchases by issuing new shares of its stock. This time, though, they're issuing 750 million. Some of it will go towards the business, not all Bitcoin, but I'm hoping 90% plus will go to Bitcoin. But even despite all of the dilution that they've done, you can see this has not yet diluted shareholder value, meaning that each share still represents the same or more of underlying Bitcoin. Okay? So go ahead and think about one whole coin being, say, 84, 86 shares in that range. It's been tight to that for quite some time. And another way of looking at it using this chart here is the amount of Bitcoin per share. It's about 0.0125, give or take a couple of shares. But anyway, that's the important thing to look at, and all of the information is in here. So hope that helps. But be careful. Everything can blow up, and we'll talk about risk as well in a couple of slides. Now, next question is from Random Guy, the third question. Now, I'm trying to do, just let me know if this works. I'm trying to answer more questions, so I go real fast because I want to try and address as many issues as possible, so excuse the speed. Random Guy, do you recommend a non-KYC hodl bag of Bitcoin as well as the normal stuff in case things get 1984-ish? As long as you buy and never sell, there's no tax legal issue either. So first of all, there are strange things happening around the world. This is a tweet from me this morning. And due to the so-called, as you call it, 1984 times, I am going to refrain from using keywords going forward. But I will speak in code so as not to be pulled off, you know, the certain channel, because that's been happening a lot lately. Check my Twitter and you'll see that. But in this little one, the C word have touched down under. Brace yourselves because they're gearing up for a change, and that is the top 4 Australian banks are going cashless. They want to build that cashless society. What are they going to replace it with? Yes, digital stuff that you cannot control in your hand or under your mattress or wherever else. So there's a new term that I call go bag, which is an old expression for stuff people who sometimes have to escape in a short window of time or run to safety because of a forest fire or a flood or some type of terrible situation in a country. I'm going to use the term go bag, which is a non-Kentucky wallet, let's just call it. Now, typically in a go bag, you've got enough food and water and medical supplies and cash and clothing and maybe some sun protection, who knows what. A multi-tool, but these go bags are very critical. And I suggest everybody should get a go bag. So yes, we agree. Using that analogy of non-KYC as the go bag. But here the advantages are, first of all, privacy, holding Bitcoin in a non-Kentucky wallet helps you protect your privacy because you don't have to provide your personal information to the exchange or anywhere else. Also, it means that your Bitcoin holdings are not linked to your identity, which can be important if you're concerned about government surveillance or other privacy threats. I wish I didn't say that. Security as well. The main security risk associated with holding Bitcoin in a non-KYC wallet is that if you lose your keys, you're stuffed, okay? So it's important to store your private keys very securely. Please make sure that be very clear. Also, risk of authoritarian confiscation is a huge part of the ARK Invest thesis around Bitcoin price. People are going to get more concerned, and me too. There are going to be more and more totalitarian states, and governments may want your Bitcoin holdings to either control you or punish you or whatever else. And therefore, the go bag, this thing, everybody should probably get one. So that's all I'll say on that topic. I hope you get the message, but we agree. Next is from Suk. What's the risk of going 100% into Solana now compared to loading 100% into Bitcoin and waiting for the halving? So sometimes I've addressed these questions before. The first time I did the risk curve was in 2021, and I've always stressed, like with Bitcoin, you know, according to Yale back in 2018, they said there was like a 1% chance of go to zero. Now it's less than a third of 1%. But just imagine there's a 1% chance it goes to zero. Nothing is risk-free in this world. So I always put together kind of a risk curve to show you how you should play. And you always need to balance risk with return. If there's no return, don't touch the risk. Okay? Make that very clear. Now, this is the way I stack things up right now. And I don't want to offend anybody that may be somewhere on the spectrum. Just imagine it's random logos stuck on a red line. Now, the more you go to the right, the higher the risk. Therefore, you need to get a lot more return from that risk. Otherwise, it's not worth it. And remember, always, number one, preserve capital first. And number two, chase alpha. Grow your capital, but always preserve it first. It's not worth anything is not worth risk. So if you look at this, I currently, the way I look at things and the way the world turns and relative value for money and balancing risk and reward, right now, when I look at all the models I've built for years and years and years, Tesla and Bitcoin are my two biggest positions, but now Tesla is bigger because I deem it to have less risk. But if Tesla goes in a rampage, I'll swap back into Bitcoin. And if Bitcoin does what I think it's going to do, we're all going to be fine. But therefore, I think, considering all the risks of kind of self-custody and everything else, I feel more confident, for example, holding shares on a stock exchange, on an exchange, centralized exchange, than maybe self-custody. So that's just my personal preference. Now, what you're talking about is going 100% into Solana. Bad idea. Let me explain why. So here, this is a visual of what I'm talking about. This is a new chart called the GMI chart, the Gonna Make It chart. So if you imagine Bitcoin on the far left, it's a 99% chance it's going to make it. 1% chance it could blow up. So do everything with that thing in mind. Now, I did block out some of the other tokens on this list because I don't want to offend any bag holders that are out there because people get very upset. And I'm going to do more of that now, but I will share this type of stuff within Patreon later. And then they can take the hard truth in there. But if you look at certain assets, again, there is a probability they're not going to make it. They may not die in the next year or in the next 6 months, but over the next 4 to 6 years, they'll wane away and disappear. And that's just the nature of the beast. This is a probability matrix that looks at all our models, compares assets against each other, and determines, are they going to make it? Okay, so that's it. Next, from Ricky A. Regarding Bitcoin, I watch you regularly and I've heard you mention to hedge Bitcoin when price goes up. Not sure what you mean. Can you clarify? Yes, and I'll give you a real example too. First of all, this actually ties back to the MicroStrategy question too, why I might go heavier in MicroStrategy, because I can manipulate it much better using call options. Far better, in fact. It's kind of crazy, but there are a few different ways to hedge Bitcoin when I talk about hedging. And people need to really understand this very carefully. So one way is to buy put options. That's insurance against the price going down. Put options give you the right to sell Bitcoin at a certain price in the future. If the big price of Bitcoin goes down, you can exercise your put option and sell Bitcoin at a higher price. For example, you could buy a put option of Bitcoin at $30,000. If the price goes to what many believe it's going back to $15,000, you can sell it on the market for 30 grand. The cost of insurance right now is about $2,500 to do that per Bitcoin. So the other way is to sell a call option against your long position. And I'll show you an example of that in a second. Also, you can short Bitcoin like you short a stock. And there's another way too, which is a bear spread. That is, you buy an at the money put, for example, and you sell an out of the money put. So for example, you'd buy the $30,000 strike and you'd sell the $20,000 strike just to alleviate your cost a little bit. It's kind of what I do in reverse a lot too. Now, hedging is not without risk, so be careful out there. Be careful, really. Do not play with options unless you really know what you're doing. Paper trade first until you're 90% successful. Now, I'll give you an example of what I did and how I play with MicroStrategy. Now, I have sold multiple tranches of calls when I started going, based on our ARB model and other things. It just looked completely overbought, which means the price is too high. It has to mean revert. So I sold about 20% of my portfolio. I hedged selling the $400 strike call options. And then a big chunk when it went above 430. My break even on the 430s was about 460. My break even on the 400s is about 430. On the right, you see the $400 call that I sold. It fell 80% just in 5 days. And that shows you how you can hedge. Now, did it cover all the losses rather than just selling out? No, but you have to understand, I like to stay in the underlying position because I want to take it to long-term capital gains for tax reasons. But I can milk it this way on the side. But of course, the gains I make in these options get hit with short-term capital gains, but not the big bag that has long-term. So that's how I do it. And I'll be doing an awful lot more of this as we go forward. And when the time comes, when our Bitcoin gets to, I don't know, 70K, 90K, 100K, a lot of people are talking about 140K, 120K, 180K, and more. Literally, if this BlackRock spot ETF is approved, we are going way north of $100,000. And that is just mathematics that I've covered many times before. Not slinging hopium here, just numbers. Now, any update on your Bitcoin ETH pair trade you did back in June? Do you plan on holding until an ETF is approved or just taking advantage of the discount? And you might swap back more as a short-term trade. That is from Tayrides. I hope I pronounced that right. Tayrides, cool name. First of all, let's show the trade. I do all my trades on Patreon live, and it's been a crazy 8 months. But this was it on June 20th, 10:51 a.m. For each Bitcoin I swapped, I netted 3,180 ETH. That is the Grayscale Ethereum Trust, because the ETH premium, the discount was 52.9%. Okay, at the time, ETH was trading at, like you can see here, $7.87, etc. And my whole thing was, okay, I watched the Grayscale Bitcoin Trust wither away because of the BlackRock news, and I was like, whoa, hang on a second. The Ethereum one hasn't withered away. And once the Bitcoin Trust is approved, my thesis believes that the Ethereum Trust will be approved too for a spot ETF. That is the idea behind this. Let's examine what has happened since. This is the chart of the pair. Remember, this is not Ethereum. This is the Grayscale ETH Trust. So I'm swapping Bitcoin, a crypto, for a stock, ETHE. And you can see where it was. It was about 3180. I was watching it. I wanted to do it, but it took time to move. If I was able to move a bit faster, I would have got like 3,400 ETH per Bitcoin. But of course, it took time to move money, swap it around, etc. Sell Bitcoin, move the cash to another place, buy ETH in a different exchange, etc., etc. But the move over the last 47 days is 20.33%. Now remember, this is a chart of Bitcoin divided by ETH. So it looks like it's going down, but that means there are less ETH required to buy one Bitcoin. That's why it's up 20%. Now looking at the math of the trade right now, as of today, I don't know how it's going to open tomorrow, and ETH did go above $12 a few days ago. Bitcoin price, when I did this calculation, was $28,910. Now it's about 29,000, so it's gone up 90 bucks. The ETH price today per the chart is 2,545 shares of ETH per Bitcoin. I got 3180 per Bitcoin. Now the ETH price today is 1140. If it goes to 12 bucks tomorrow, these numbers will be a lot better. And the value of 3,180 ETH I got for every Bitcoin is 36,252. So the gain on the swap, the pair trade, is $7,342 per Bitcoin. In, what is that? How many days was that? 47 days. So that's why we swap stuff. And again, for the people out there, you know, whenever you sell a pristine asset like Bitcoin or Tesla, people get upset. But remember, I'm a relentless alpha hunter. I want to teach you by showing you what I do, and I'm not loyal to any asset. If I believe something is going to outperform Bitcoin and has less risk, I'm going to YOLO into it. That's just the way it works, okay? By the way, AI made that little graphic. I plugged in relentless alpha hunter, and that's what it came up with. So I don't know if it means anything, but it's a wolf. It's a Lobo. And next one is from Bardine. You have shared that you trade with 20% of your bag. Is this 20% of your available margin, excess liquidity, or 20% of your total account value? So it's complicated. Let me kind of explain how this all works. So I'm mostly a lot of options in my account, and then big bags of low cost basis equities like Tesla, Google, etc. All my meta is only in synthetic longs. But right now, as of today, and this is an example, if you imagine my equity portfolio on my brokerage account is worth $100. All right, I'm now $18 cash, which is 18%. My stock buying power is $90. Okay, even though I'm technically in the account only $82. Only $18 cash, $82 is already in other assets. But I use those other assets to buy more assets when I want. Like I could double my account size tomorrow by using all my stock buying power, or sell a whole bunch of puts or calls out of the money using my margin available, which is also $80. So if you think of it as ratios, positions to cash is 5.43, positions to margin is 1.31, and positions to stock buying power is 1.25. And that's where I am today. Now, I used $100 as an example, but if you use $1 million example as a portfolio, that'd be $180,000 in cash. And the ability to buy literally another nearly $900,000 worth of stock using the stock buying power that I have. Because my brokerage, I do everything on margin, and they give me margin. But I like to have a huge, very, very big safety airbag. Okay, or else I can get wiped out, and I never want that to happen. So I always have a ton of margin, and I never ever use it all. Hope that helps. Next question is from SP. If we are so bullish in Tesla, why not just buy TSLL? That's Tesla leverage stock. So let's jump into that. Great question. Let me explain what it is and why I would never touch it. One, a couple of kind of risk management reasons. Losses can be magnified. And leverage ETFs use borrowed money to amplify the returns of the underlying asset, which means your gains can be magnified, but also your losses can be magnified. Now, there's also a problem called daily resets, and that is the returns of leverage ETFs are reset every day, which means that if the underlying asset goes up in price one day and then down in price the next day, you still could lose money. And I'll show you in the chart how that works, even if the underlying asset went up overall. And then there's a thing called path dependency. The returns of leverage ETFs are dependent on the path that the underlying asset takes, which means that if the underlying asset goes up and then down and up and down and up and down, you could lose more money than if the underlying asset had just gone down. Believe it or not. And illiquidity, leverage ETFs can be illiquid. So if you're moving large amounts of money, it's no good. Also, there are tons of other additional risks. They have high fees. This one I think is 1% fee. It's complex. Some people find it complex to understand. And what weighting do you use to hedge your actual assets? And by the way, we do use inverse and leverage assets in the pair trading on steroids model. So they can be very helpful, but you don't want to be in these trades for a long period of time. Let me explain why. This is the Tesla chart versus TSLL chart. Look at where we were back in well, I can read the date, but back in, say, summer, November, October last year, they were kind of close. But look at how the gap grows. There's a little double arrow on the top left, if you can see it, versus the top right. This is how you lose. It's like paying 2% management fee, 1% management fee, and you get all the up and down stuff that is path dependent, which basically investing in funds is not equivalent to investing in directly in the stock, and the fees suck, and so does the slippage on the trading between. So no, hope that helps. But if you are doing a short-term trade, you want to go long on the way up and leverage long on the way down, it can work, but you've got to be in there like for like a post-earnings dip or something like that as you go forward. Next question from Sander V. Are you able to share the Crypto Compendium score and your opinion of Internet Computer Protocol, ICP? I sure can. I've covered it a couple of times before. This is where it ranks on the Crypto Compendium from the top 500 cryptos. I put a big kind of pink arrow pointing to the pinkish ICP icon there, and you can see where it ranks. Current score is about 4.8. I don't touch anything unless it has at least a 6.5 score, and that is the top 10 percentile, which I discussed with you all last week. And just check out Sunday's Q&A last week that covers this. Everything is timestamped, so you can find it easily. And what is interesting, though, about ICP, and this is a separate issue, so it is a smart contract platform, despite it being a computer engine and theoretically not a kind of blockchain per se in the true definition of what a blockchain is. But the SCP score against all layer 1s, layer 2s scores 17th now out of 31. So it's pretty much middle of the road. And it beats some names that would shock you. So tokenomics, etc., compendium score sucks. Therefore, I wouldn't buy it. But it's also middle of the road from top 31 SCPs. A lot of old stuff in there and crap. But it was surprising that it was actually better than I thought it would be on the SCP profiler. So hope that helps. Would I buy it? Nope, not at all. Next, this is an interesting one from our friends in Brazil. Luizo Ruvio. I hope I got that's a really hard Brazilian name, but beautiful name. Could you please show us the layer out model in the daily USD BRL chart? If possible, show us the IDSS. So basically, this is for FX traders. So you go in, but I'll show you how these tools actually work. First of all, we'll start with the US dollar versus the Brazilian real chart. And you can see this is IDSS on the 4 hour. It tells you kind of when to buy, when to sell, when to buy, when to sell, when to buy, when to sell. It's going through a really weird period right now because it's got to kind of do two buy signals. You got to also find confluence with the mean reversion and the trend. And you can see the IDS confluence results here, 90% win ratio, 100% on the trend. But there are things that you really need to understand when you look at this chart is TA can only do so much. You have to always keep your head out the window, find out what's going on in the macro. Now, there's a couple of things that make the Brazilian real a little bit stronger than it should be. And that is the central bank has raised interest rates in an effort to combat inflation. And this has made the real more attractive to investors, which are looking for higher yields. Also, Brazil is having really good, strong economic growth benchmarked against other countries around the world. And this is helping support the real. And also, the Dixie kind of has been weak and weakening overall. And especially with the downgrade from Fitch last week. Big issue covered yesterday and last week too. And on Twitter and stuff. So watch what's happening here. Look at the macro very carefully. Now, let's look at layers of support and resistance. This is the second model, the layer out model. This is where the US dollar Brazilian real works. Now, it's interesting. It doesn't really tell you much here, but let me add some color to these lines to make sure they make sense. First of all, if you look at where the support is on the layer model, layer out we call it, but it also can find support and resistance levels. You can see the US dollar Brazilian real support is at 4.72. There is interim resistance you can see at 4.93, a lot of confluence around there, and it's bumping up what I call layer 4 right now. And then layer 6 is the 5.06 resistance. If for this to break through this level, the Dixie has to tank. Okay, so watch the dollar index as a separate standalone thing. And then the 5.27 resistance will be next after that. It could be a big jump. Again, the Dixie would have to go to like 90 or 92 for this to happen. And way above the top layer there is the no man's land. I don't see it going up there for a while because, the Brazilian real is not a perfect currency either. They also have their own issues like the US dollar and many other fiats around the world. So I hope that helps. Next question is from Wandering Star. When and possibly where will it be safe to borrow against our Bitcoin, if ever? Just like proxies, be very careful with these things. So I wouldn't do it unless this is kind of like my shopping list to borrow against my Bitcoin. And that would be, it would have to have a player in there, like a blue chip firm that has 4 decades plus of brilliant history and respect and trust and credibility. That I need a firm of that size and that reputation to borrow against. In addition, or alternatively, a DEX solution with liquidity that is secure as hell to allow you to borrow against as well. I would need to see very strict rules to help protect borrowers. If there's a massive price fluctuation, you don't get liquidated, which is very bad. I would also look for insurance. Of course, you're not going to get insurance on a DEX, but you want some type of equivalent to it as well to protect your assets, your pristine asset. And also, what you can do too, and I have done this in the past, there are banks that will let you use your Bitcoin as collateral if you want to borrow for your 3-legged stool. So if you had, say, 3 Bitcoin in an account that's worth, say, $100,000, certain banks that are, if you have a private banking relationship, etc., they will see that as collateral and let you borrow against it, maybe give you half the value. So if you have $100,000 in Bitcoin, they'll give you $50,000 towards buying a property going forward. So these are some of the ways in which you could kind of think about borrowing against it. But again, in terms of timeline, I think we are literally 3 years out from me being comfortable with a very small portion, again, less than 10% of the bag. If I was in a pinch, had to buy some property that was on sale, that would be one way to get the money. So I hope that helps. Next one is from Jesus is Messiah. I heard you say in an earlier video that you've applied what you've learned from stocks to crypto, and hence all the wonderful crypto ratios. Do you have a similar evaluation process and list of ratios that you use for stocks? I do. And a couple of things. Well, this is just the top 20, but it's by no means all that I use. And some I place a lot more weight on than other. And you can just pause the video and look at them all. I'm not going to go through them all, but you see these as well in some of my mining videos. And also, different assets need to be evaluated differently. Like crypto needs to be evaluated very differently to a Bitcoin mining stock, which needs to be evaluated very differently to a very disruptive company like Tesla. That's the problem. So Tesla is so difficult to value. You have to play where you believe the puck is going to be. Forecast out. Same thing with kind of Bitcoin price. So these are kind of my custom ratios for specific industries. For example, Bitcoin miners. I've built a ton of them, and we have a new engine that's coming soon. It's going to be awesome. But it's just dialing in and it's really tricky. There's so many different ratios, and I have ratios on ratios and rankings and composite scores, and it's a bear. But if you want to learn more about how I do it, I have what I call Investing 101 playlist. Again, I'll add here after the show. I point to the middle because I don't know if it's going to be left or the right. But there's some good stuff here, like how to pick stocks, how to position size, the investor mindset, a little bit of psychology stuff there. And then analytical series, the Sweet 16 kind of ratios to look for, things to look for when you look at stocks. Financial literacy, what I call the 8-cylinder engine is in there too, and a whole bunch more. So if you are serious about investing, literally everything I know is in this playlist in one way or another. And next, and I think it's the final question. No, it's not. Oh, it is, yeah. Did you ever check DOMA from Melting Money? So I don't know why a question would come in like this. Sometimes I get asked weird questions, but it's from Patreon, so I answer it. First of all, it is a holding company, and I don't like holding companies because they often have a passive management style, which means that they do not track performance of the market, and this leads to underperformance typically. Also, there's concentration risk oftentimes. There's a tax drag for holding companies. There's illiquidity, tons of other problems as well. And it's coincidentally, I touched on Berkshire Hathaway, which is also a holding company, and just show you how it underperforms other assets like Bitcoin and Tesla. Of course, they're crazy good assets, but basically 61% over the last 5 years. Not bad, but not enough to make life-changing money. And if you look at the last 10 years, Berkshire Hathaway has actually underperformed the S&P 500, getting back to ETF funds. Now, DOMA, there are a bunch of dangers with DOMA. Less than 1 year of cash runway left. High volatile share price over the last 3 months. Very unprofitable and not profitable for the next 3 years. And shareholders have been diluted. So this is just yuck, 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 yuck. Don't touch it. And the chart reflects all of that too. You can see it makes crypto look safe. It's down, what's that, 97% over the last couple of years. So yeah, that would be what they call a poop coin in the stock market world. So thank you, everybody. And in our favorite part of the week, helping animals, we donated to Rick O'Barry's Dolphin Project to support Umalumba rehabilitation in Indonesia. And the first and only permanent dolphin rehabilitation, release and retirement facility. They bring in dolphins that were used in shows and kind of water circuses and stuff like that, and they make them better, healthy, and then they release them back into the ocean. And this is Rocky. We sponsored Rocky, so thank you all so much. And he went into the ocean in 2022. That's awesome. And also remember, if you want to amplify your intelligence, please subscribe to this channel. Don't waste your time at all, but we do make you smarter, that's for sure. So with that, thank you to the mods in the chat. Thank you, MT, and everybody else. We do have some questions, and without this team supporting me, I wouldn't be able to do what I do every single day. So let's go to some live questions. This is always fun because I never know what I'm going to get. MT, thank you so much for coming. Mr. Keyframes, do you have any thoughts on options ETFs like TSLY and NVDY? Again, the numbers on them are amazing, and I think the market will continue to pump the stock market into the next year. So I just covered ETFs and why I don't touch ETFs. I much rather the precision and the accuracy and the timing and the models and how they work with pure form assets like Bitcoin or Tesla or MicroStrategy, and not mess with options ETFs. And there's also other impacts like contango that basically bleed away your returns, just like I showed you here between the path. Let me pull this up again just to remind you all. Where is it? Wow, 55 slides today. Where is that slide? Yeah, here, this one. To give you an example of ETF slippage. Like if you're holding something for a long period of time, more than a month, you're going to get hosed. Therefore, don't do it. Very, very important. So Mr. Keyframes, no, don't play with that. Unless it's for a very short-term reason. Just quick in and out. Do not stay there for more than 30 days. Matt, isn't the SEC shooting themselves in the foot by approving the spot ETF? First of all, I think the fourth pillar of the government is BlackRock. BlackRock call the shots. Government works hand in hand with BlackRock. It was very telling last week where Gary Gensler openly admitted, hey all, I'm going to focus on AI right now. There's enough of crypto. I think, guessing, allegedly, perhaps, I don't know, somebody whispered in his ear, said, hey, you're giving the Democrats a bad name. Ease off the crypto world. It's disruptive technology. We can't shoot ourselves in the foot. So in this one, they have to do it. Like the fact that they approve leveraged options futures on Bitcoin is just insane. It is the dumbest thing ever, and not do the spot. That is just stupid. And that shows you that the person at the SEC is corrupt. No ifs, ands, or buts. You can't approve a futures ETF or a leveraged futures ETF without a spot. It makes no sense. Talk about putting the cart before the horse. And now you're getting me all animated. So sorry about that, Matt. Jason Mack, do you think we are still mid Q4, late October, November for our next Bitcoin mover, 32 to 36K? Pausing lower CPI and possible ETF being catalysts. Yeah, there's a lot of odds now. First of all, the odds are at 65% that the Bitcoin ETF will be approved. Once that happens, forget 32K, forget 36K. We're going to go a lot higher. And the on-chain data that I spent a lot of time looking at every day is staggering. Like literally nearly 80% is held by long-term holders. They're not selling before the halving and may not be selling at all for a long time. So it won't take a lot of money to move this thing a large amount. There will be some catastrophe. There will be a rate cut probably before the end of the year. Some people are saying not until late 2024. I don't know. Like when you look at the math of everything that's happening all around the world with central banks around the world, with the amount of borrowing, the deficits exploding, which we knew would happen, it's mathematics, and the interest that governments have to pay. They're wasting trillions on interest that could be put towards building schools and hospitals and preparing countries for the next disruption that's coming. So lots of crazy stuff happening. I think once we get through, you'll notice this is Paulie. He's a polar bear, not a bear, so it's not full bear, but he is back. He's slightly out of sight. Let me see. There's Paulie, the polar bear. But he tells me the next 4 to 6 weeks, we will be flattened down, and that could be a vicious wick down, and that's what I'm banking on. That's what I've been preparing for the last 3 months. So I hope that helps. But after that dip, rocket boosters towards the end of the year. Always October, November, December typically are very good. September sucks, and I'm bracing for September. My gambit is on data and history and charts. Everything looks very frothy now, overbought. Things have to come down to earth just for a little dip. Not the end of the world. That's why I emphasize having cash. Nezuko. A lot of my friends don't see EVs as the answer to climate change. I tell them that it's an important piece of the puzzle. Will Tesla always have an important place in this climate equation? They absolutely will. If you look at their master plan part 3, it's all about how the world can fix the climate problem. And it doesn't take a lot. In fact, the amount of investment required is less than the amount of investment in fossil fuels. So that's important. And also, just think for me, I did an analysis a while back. I used to have an X6M BMW that got about, 14 miles to the gallon. And if I'm doing a 500-mile trip, the amount of gas that thing burns is horrendous. So yes, they're definitely making a difference. And that's why governments around the world are moving towards zero-emission vehicles. And I think ICE cars will be a thing of the past as we go forward. I don't know if it's going to be 2030 or 2032, but the amount of ICE cars sold it'll probably be a complete flip of what we have right now. So California just hit over 25% battery electric vehicles being sold today. I think fast forward to 2030, that'll be 75% BEV, 25% ICE. And by 2035 in California, there'll be no ICE. And other countries will follow. Remember, California is the 5th biggest economy in the world, so it's massive. And people tend to take a page out of their book, despite some mismanagement on occasion. But we won't talk about that at all. So yeah, Tesla have a huge part. And also they are helping grids store electricity when there is Schwankungen, how do you say, fluctuations in power due to kind of solar and wind and other types of things. So their mega pack business is growing very fast. In fact, some of the biggest customers come from Australia, and they're going to fix that. So yeah, Nezuko, Tesla will be a huge part of this. And they're also setting the standard of what can be done in many different respects. So as well, thank you for your super stickers as well. Glenn Johnson, Investing KO, Signal 103, Jeff Hammer, Forrest M, Zeno V, Dog1, IROC 007, Dragon 183, Abdarum, Shaikh, SAR, and Solana price by the end of 23. Last question that just popped in. It's hard to say. So I think we just need to get $30 behind us. We are seeing a massive change in the tide. Everybody's now beginning to see, okay, maybe ETH is not perfect. So what is the ETH killer? What has the most adoption? What has the widest breadth of dApps? What has the most throughput, the most security, all that type of stuff. The world is changing. In fact, we're seeing people that hated it, they're now buying it. And we're seeing things like ETH Maxis come over and they're upgrading it. So it's gotten everybody's attention. And it's slowly, then suddenly. And once a lot of money kind of comes in, the price will go. by year end, it really is a function of what Bitcoin does. I think if Bitcoin does go to 42K by year end, which I think is quite possible, if there's a Bitcoin ETF approval, we could see Solana 3xing from here, so $60 at least. So, but that is not financial advice. But that's so I think things will be pretty impressive if, again, remember, Solana keeps the lights on. And if Fire Dancer comes out by year end, wow, or even before, that's a game changer. And also, Martin Brock, Stephen Weston, Jim Manley, thank you all for coming. By the way, DCA tomorrow on CTO Larson's channel, 7:30 a.m. Pacific. That's 10:30 a.m. New York time. And that is 4:30 Central European time. So it'll be a fun show, going deep on many interesting topics as well. Thank you all for coming. Happy Sunday. Go out and get some fresh air, time with the family and stuff, and appreciate each and every one of you for coming. See you later. Oh yes, forgot to mention, somebody's telling me what to say here. At 11 a.m. Pacific, tomorrow, I'll be doing a Patreon exclusive video. I call it the Fireside Chat. And that's for investor tier and above. And they are great. And we got some really cool questions in there too that are prepped just for the Patreon community. Real investing answers and dilemmas as well, helping solving problems every single day. So thank you all for being here. Thank you to the support out there, the moderators and everybody else. See you tomorrow.